Okay, let's go ahead and jump into today's breakdown. So, if you have been watching the past four streams or four videos now, we've been looking at gold for the long position. You can go back and the other videos kind of go over like the analysis and stuff that we had. But here is the outlook from yesterday. So, yesterday I had a funeral to go to. So we hit take profit one Wednesday. Let's go over some stuff. Let's back it up, back it up. Yeah, perfect. So we had take profit one that got hit Wednesday. This was our liquidity zone that we were going to watch how it reacted to, and we got a break above. Formed a nice flag here. So then, therefore, we're going to be trading into this zone, and then we're going to see how it reacts to this take profit one, which also simultaneously acts as, guess what? An LQZ, a liquidity zone. Same for these up here. LQZ. I'm going to leave take profit 3 alone. So yeah, we're going to be buying into this. We'll go ahead and fast forward the market. Okay, boom. Take profit 1 gets hit on Wednesday. So there is a couple buying opportunities that you could have participated in Wednesday. It was this one right here. It was this flag right here. And then there is also this flag right here. All of these were great opportunities to buy. And the reason we were looking at the buy was because we had just previously, I'm going to draw it on this high here that had got broken. And then this right here was the low. 4-hour liquidity zone, aka low, and the low never got broken. So we had this right here, the high got broken, we came down, and then we started pushing back up. Zoom out for you here. So yeah, here was the low. This was the liquidity zone, but here's the low that we were really focusing on to see if it broke or not. And closed below, not just broke, but broke and closed below. So we never got the break. And instead, on the lower time frame, we started getting the push up here. We make our impulse down, comes back up, doesn't do anything, breaks higher, fooling everyone because it's breaking this low, not realizing that this one is the low that they should be focused on. So after it breaks out that low, fails to break the bigger low, we start pushing higher. Once I see this is the first attempt and second attempt. Doesn't break it, and instead now we're going ahead and we're going to start pushing up higher. So that brings us back to where we were. So let's get back into it. You had 3 opportunities that you could have bought Wednesday. The opportunities that we saw were this 1, 2, and 3, which would have been from both of those. You could have got in here. Take profit 1, that was 156 points. From here, you were looking at 125 points, and then from the break above, you would have been looking at 50 points. But either way, if you're using a 1 standard, and a 1 standard being $10 per pip, and it being $10 per pip, you're looking at 1, 2, close to $3,000 just off of a one standard. That's not using a 5. You're not using all these massive contracts. You're literally leveraging a one standard, and you're doing 2,000, 3,000 just off of that. Pretty good. So we got the first take profit hit. So now let's go ahead and fast forward. We start breaking back in, and boom, what happens? Take profit 1 gets hit. This is Wednesday at 9, and guess what else gets hit? Take profit 2. Boom. I mean, to the pip. Take profit 2 gets hit, and go back again, watch these other streams, because you're going to see that we prior, like a day or two beforehand, maybe 3 days beforehand, set these take profit zones, and look how good they're holding. Okay. So take profit 1 gets hit. If you were still holding, and even had moved your, like, locked in your profits to where your entry was if you entered here, but if not, you were just kind of trailing behind here if you'd entered here, and if you'd entered here, you're trailing behind here as well on either one of those. And then if anyone would like me to do a video on how do you trail your stops, then we will also do a video on how should I be trailing my stop losses, because that's kind of important, and there is a specific way that you should be trailing your stops. You don't just randomly set it, because what will happen is stuff like this. Okay, so say you did enter, you saw the flag, you put your position here. That's a terrible arrow. Let's just actually use an arrow. You entered here, okay, and then you had your stop loss set below here. Well, the market now pushes up, hits that first take profit, but since it has good momentum, you would just bring it to break even, or a little bit above break even. You wouldn't trail your stop right below here, because what will happen is the market will take you out, and then it'll push higher. Because I bet if we drop down on the 5-minute time frame, we were looking at this as a liquidity zone on the smaller time frame. And I even did a stream talking about this trade, for example, and then you could have entered here, and then you could have rode it to the top for take profit 2. After take profit 2 gets hit, you get that wick, and then you get this candle that's nowhere near it anymore, okay? You get your first push back down, and then if you're still not sure what to do, this is only the 15-minute, you wait for this close. Now that we got that close, we know since it's broken below here, okay, we're going to be looking for some more downside. Just going to draw a horrible flag of some sort, and then we're going to be coming lower. So fast forward. Yep, market continues to drop. This is the first area that you would be looking for some type of descending flag. We're looking to our left. Is there anything down here? Yeah, there's that as a target. Let's take this one off. There's this as a target. Okay. Then let's go ahead, and it's kind of floating above this area, so it's not really closing below. Let's go ahead and let it play out. Boom, we start to get a hover up above. This looks like a giant flag. And we're coming into Thursday at this point. This is Wednesday night Asia session. As soon as we get this right here, putting stop below here, and then we're targeting take profit 3, and then we're going to look for other entries. Boom. What a close back above. starting to look like we're getting a flag. There's a liquidity zone. But still kind of choppy. Boom. And that's where we are. This market's still going up. It's if you hadn't taken your profits. So the first take profit 3 was the one that we were going to hold out for. Okay. And even that one, again, was at 182 pips. And then if you didn't take it because this candle just kept pushing through, so you didn't have a take profit 3, then you were looking at 350 points off of this entry right here. So, yep, take profit 1 got hit, take profit 2 got hit Wednesday. We go through Wednesday. Wednesday Asia session comes up, aka Thursday. And then we're looking for another long position to take out take profit 3. You enter the long position. And then there you are. So beautiful, beautiful positions on gold. And as you can see, still pushing up. We'll look on the 1 hour. Have a 4 hour liquidity zone up here. Let's drop to the 4 hour now. This is why you mark these things, by the way, is because now you know what time frames you should be going to look at. We got a zone here, which I would use for like the 1 hour. And then these are just kind of mitigation because if it's going to hit any of these, I mean, really, this is so close, but it's on the 4 hour. But these are all little areas that we could pay attention to price to. Yeah, that one right there for sure. And then I would use not this one, but I would use that got hit. This one as the 1 hour today. And then I would just go ahead, because if we are going to take one out, it's still going. It's like 400 points right now. And then to this take profit, we're looking at 460. This is from Wednesday Asia session, and we're just into Thursday morning right now. So insane. Nothing new. If y'all knew how many times we've called trades like this is just pretty normal for the most part. As long as you're in position for gold's gonna move. It's just always there. I see people all the time, you're taking 10 points, 5 points off the market, which is like if you're using a high lot size, yeah, you can take 5 points, 10 points. But you don't have to use a high lot size, especially with not the right strategy, but the right strategy for you. You know, find something that works for you. My friend and I, we've been trading market patterns for 4 years or 5 years now, and then we just started trading liquidity zones a year ago because we realized that in relation to market patterns, there was always some unexplained wicks and things that we couldn't really like figure out why it would happen, but we knew like, oh, it may wick back here. But then I realized in relation to market patterns, if I looked below the patterns to where I might see the wicks, I always found these like areas that price would want to come back to, like this one right here. You know, even though it made this high, it wicked up and came back down. Like I was looking for it to come back down to this area because there was a liquidity zone. Same thing for this, like, or this one right here. The reason we could take in this to take profit 2 instead of going ahead and selling and take profit 1 is because I looked down on the 5-minute time frame and realized there was a liquidity zone that had never gotten hit. So in relation to market patterns, there was always these liquidity zones that I realized had been untouched. The market pushed up, made a low, and just continued higher. But in markets, I'm going to drop down here. You're going to have, you know, your impulse pullback. And then it doesn't always look like this. So what I realized is that there's always a liquidity zone here. However, in a normal market, the reason I'm finding if there is or isn't a liquidity zone, we'll get the impulse up. Market might push higher, kind of dwindle up, and then it's going to give this little wick back down below, push up, and then we're going to go higher. And I was like, oh wow, like this is this, except this is fulfilled. It's the same thing. Like this is the exact same thing, except when I see this, I'm putting my line because that's a liquidity zone. The reason I'm not marking these as a liquidity zone because this was the liquidity zone, except the market came back, pushed up, grabbed the low, and then took off higher. And that's where you're seeing like, oh, well, this is a head and shoulders, and this is actually just a flag right here. And it's just read between the lines. You can make up whatever terminology you want for this thing. It's just the market, and you just have to be able to. You have to learn how to read it, so that way you can make the most educated guess for what may happen. And yeah, I'm comfortable saying like we're gonna hit this right here today at the 1 hour take profit. So yeah, go back, watch those other streams. Hope you enjoyed this one. This is just a quick breakdown. I'll also go over some liquidity stuff, some flags. You'll see a lot of my patterns on the chart. I trade the same thing. This gold gives a couple patterns that you can always look for. It also gives you some indiscretions that you can read between and take advantage of. I will catch y'all next time. So if you enjoyed this video, if you're watching on YouTube, please be sure to like, subscribe, and comment below. And I will continue to put these out. And if you're on TradingView, I hope you enjoyed this educational video. I'm not going to put it out there as a, what do you call that? A trading setup or something. I don't know. There's something you can choose from. This is going to be more so an educational video. But I hope you enjoyed, and I will catch you all next time. Peace.